Hello and good morning. Todd Miller here with a quick update to as far as the inventory and what's going on with the inventory in the Las Vegas market. This is geared toward real estate agents and buyers who are out there looking for an REO property. Frankly, there's three kind of properties you can get. There's an equity seller, which there's very few of those. There's a short sale, and a lot of people don't want to write offers on short sales because of the uncertainty and because of the time frames that can be involved. And there's the REOs, and the great thing about an REO is you've typically got a seller who is going to go ahead and move the property. They tend to price it pretty good, and minus the addendums and things like that the REO sellers have. It's a pretty easy transaction to get done within a reasonable amount of time, so they seem to be pretty popular. And those agents who have been out there specifically looking at the REO properties are saying, hey, where did they go? I mean, I keep seeing on the news that there are all these defaults, but how come I'm not seeing these turn into REO foreclosures? So there's a lot of theories and things that are going on. So I'm just going to go ahead and address those sort of one at a time. Okay, theory number one is that the banks are going to hang on to the properties until next year or a year after that because they don't want to kill the marketplace. And to some extent that's true. Keep in mind that the banks do have other loans in this marketplace, and the more it gets trashed price-wise, the more difficult it is for them to with their other loans, because now they're driving people upside down in their houses, and then they have no choice but to default. Barron's report that came out recently said Las Vegas had 2/3 of all of the people that lived in Las Vegas were upside down in their house. The next biggest market was Modesto, California, with half. So we're way above anybody else. So that is a concern, and that is one of the things that's happening. The answer question is no, they're not all specifically like holding off to stuff that's like in default. Because if you think about it, if it's in default, they're not getting paid on it. They're not getting any payments on it. It's just sitting there. And also, the longer they let it sit there, the more chance there is for vandalism or things like that to happen, especially if the house is vacant. And you've probably driven around, seen all these vacant houses out there and said, hey, why, I see a sticker on the door, but why is there no for sale sign? So that's one of the things that's happened. The other thing is that the banks are getting money from the government to do things like trying short sales, trying loan mods, trying to do workouts with the people that live in the house. And what some of them have done is, instead of trying to just pick the ones that they're going to foreclose on, and they've sort of had a moratorium, meaning they've said we're not going to do any more foreclosures on any of our houses. And for example, some of the big banks have said only our third-party servicers who give us properties and say manage the REO, we'll go ahead and do those. But our own inventory, we're going to sit on that. We're not going to do any of the foreclosures. We're just going to wait until everybody's had the chance to meet, to do a loan mod or a short sale. We're going to, and so that the government knows and the politicians all know that we've done everything we can do, and then we're going to go ahead and foreclose. So you're probably wondering, well, if that's the case, where are all the houses? Well, the truth is they're out there, and they're sitting out there vacant, a lot of them. Some of them have had people in them over a year, haven't made a payment, and what you're going to see is that there is this huge backlog of inventory that is sitting with trustees, meaning it's gone through default, it's gone 90 days. A lot of these houses, they've filed the foreclosure notice, waited the 28 days, gone to the courthouse and said, hey, we're not going to foreclose, we're going to postpone, we're going to cancel it, and then they sort of put it back in that no man's land of where they could just file another notice, come back 28 days and sell the house. So the estimate right now is there's about 20,000 houses that fit in that criteria. Now, some of those will get a successful short sale, small portion. Some of them will get a loan mod, small portion. Most of those are going to end up REO properties. They're going to hit the market. When? Well, we don't know. Some of the big sellers have slowly started to do that and to start to release properties. Fannie Mae, for example, said that it probably won't be till the beginning of 2010 till they start coming back with the same level of foreclosures that and I imagine some of the other sellers will be doing the same as well. Just want to make sure that they're doing everything right, that they're meeting all the requirements before they come back with the foreclosures. So the question is, hey, what do I do in the meantime? Meaning, there's all this inventory out there. I can't get my hands on it, so what do I do? Well, there's a couple things you can do. One is you can go to the courthouse. They have about 300 sales a day in Clark County. Most of those get postponed or canceled, but there are 30 or 40 a day that go through, and you might have a chance to go pick up a property at the courthouse, buy one on the courthouse steps. If you can get it for a good price, and it's vacant, then you might have a good opportunity to pay for it cash, put it on the market as an equity seller, and sell it and make a quick profit doing that. Recommendation is, if you're going to do that, fix the property up. The reason I say that is because you're more likely to get better financing, more offers, more money, and this is a good market for fixing up a house and selling it in repaired condition. We've been recommending with our REO sellers, latest numbers that I pulled was that my company had about 950 REO sales in the last 12 months on the listing. So we've done a good job with those, and we've been recommending to our clients, hey, let's fix up all the houses, okay? Let's get them repaired as much as possible. We'll get better offers on them, and we'll be able to net more money. And we're helping everybody in the community, because as we get more money for the houses, we tend to not hurt the other loans and the other homeowners in the area, okay? Other opportunity out there are condos. There's 1,700 of them with no offers, meaning they're on the market and they're ready to go. Now the issue with condos is most of you know, getting a loan in a condo complex is kind of tough if they're investment complexes, meaning if over half of the complex are owned by investors, almost nobody will loan in there. So what you see is you'll see these complexes where it's only cash. So prices are really good because when you can go get an 800 square foot condo for $25,000, that's a good deal. It cash flows no matter how you look at it. Even with $150, $180 a month homeowner association fee, you can still get $600 or $700 a month rent out of it. For $25,000, you'll get netting $500 a month. It's pretty good return. You're not going to see that in a CD or an IRA. So there's some good opportunity there. Now keep in mind that those properties are going to tend to be investment properties for a long time, meaning because so many investors have already bought, the time it takes for people to come back in there and for homeowners to buy so that other people can get loans, it's going to take a while. Now, one of the strategies you can do is go pay cash in a complex like that for $20,000 or $30,000 cash, put it back on the market, seller financing. So the seller finances it. You can get somebody who couldn't qualify for a loan in there, and you're going to do a couple good things. First of all, is you're going to make a good return on your money because they're going to pay higher than your cash price. They're also going to pay you a favorable interest rate to you. Okay? The second thing is that you're getting somebody in a property to be a homeowner for a really good price that wouldn't be able to get a loan otherwise. So you go buy one of these condos that used to sell for $200,000 for $25,000. You sell it to somebody for $60,000 or $70,000 owner financing. You carry the note. If they don't pay, you're going to have to foreclose. And they pay you, maybe I've seen 8 or 9% interest rate. And their payment's reasonable. It's less than they would pay for rent. It makes sense for them. It makes sense for you. It's good for everybody. So the bottom line is there's a lot of opportunity out there. And if you have more questions about investing or some of the opportunities in the marketplace, I've got my contact information on the screen, as well as my Twitter handle. You can follow me on Twitter. And if you have any questions, stay tuned. You'll be getting more updates, or you can send me a message on Twitter and I'll answer you on there. Have a great day.